In today's video, we're going to cover one of the best entry models that there is in price action trading. After me trading price action for over 3 years, this is an entry model that I think you guys will not want to miss because it's super high probability, easy to follow, and is amazing when it sets up. So today I'm going to reveal to you that exact entry model from step 1 till the last step, and you guys can start to apply that in the market. I'd also recommend to go ahead and watch the rest of my price action videos so you have an understanding of price action trading. I'm super excited to reveal this to you guys. I really do hope that you enjoyed this video and can find something useful out of it. And if you do, be sure to do YouTube business, which simply we call leaving a like and subscribe. Definitely does help the channel. Now, Instagram, all official links are down in the description below. And yeah, with that being said, let's get straight into the video and enjoy. All right, so we're here at the charts. The first thing is what we're going to discuss is what is basically an entry model. Now, an entry model needs to be a specific amount of rules or a specific sequence of events that need to happen before you take an entry, and that is known as an entry model, right? Now, this entry model has been tested over years. I can show you the backtesting data. I'll show you the live data as well. So if we can see here on this first backtesting, 5-minute close, 15-minute close, 5-minute support, 82% win rate, right? And we can see again on another spreadsheet of mine, 5-minute here, again 85. So 82 to 85%, we can round it off at, let's say, 80% win rate backtested. And this is very important to have data on the setups to make sure that you're following a structured rules when testing to see your probability and statistics. So that is how this entry model was developed. Now, we're going to get into exactly how to execute on this, so you stick around for the rest of the video because definitely going to be something interesting and hopefully something that you guys can find useful. So we're going to start off with the first part of this entry model, which is going to be understanding bias, right? So I've said this a lot. I've spoke about this in many videos, which is going to be bias here. Now, bias is extremely important. Reason bias is extremely important is because we have to understand what is going on the higher time frame. Now, I have a specific way of finding bias. I have plenty of videos on this, which is basically starting from the daily time frame. You do your top-down analysis, right? You go down from the daily time frame all the way down to the lower time frames, basically 15, because that is going to be our entry time frame, right? And you look at bias by looking at previous daily close compared to the previous 4-hour close. Now, I'm going to link a video about the bias in the description or above here so you guys can understand more about bias. But essentially, if previous daily is closing bullish and previous 4 hours closing bullish, that's going to give us a bullish bias, right? So we can put those things together. Then there's mixed bias, how to trade, but that video goes into more depth. I don't want to make this video 30-40 minutes long, so you can just duplicate that video, make it on another tab, watch this video, and then understand more about bias, right? So the second step is, if you already know how to use bias, then you're already ahead here. And the next step is going to be finding our trading range. So if we know bias is going to go up, if we've done our analysis, we've done our markup here, markup is just as important. Being able to mark your support and resistance is super important from daily time frame down. This is something I repeat on my channel again and again and again. All people who have watched my channel will be like, yes, he's just repeating himself. They're going to be more interested in the actual entry. You guys who are new to the channel are going to be interested in how you actually get to the entry. So remember, if you're a returning viewer, we have to accommodate for everyone. And if you're a new viewer, then of course stick around, because now you're going to get basically, you know, basics of the markup. Again, on my channel, I do have videos about markup. It's going to be part of the full course as well. The markup is going to be a big part there. So, but remember, in this video, we're talking more specifically about the entry model, not about the whole process to get to the entry, but it is important. So that's why I'm mentioning it, so that you guys can make sure to follow the steps in order to get to the entry model. But, you know, let's do a quick basic markup here just so we have something on the charts. And we can say that this is 4-hour resistance up here, something like that. And you would go down the time frames, marking your different resistances. At the time, that was a resistance here, you know, and you keep going down, marking all of your support and resistance, something like that, you know, and then you'd have all of your lines obviously marked up nicely here. So the next thing is going to be part of the entry model is you have to have clean candles, right? Lobster trading area, LTA, we need clean candles, right? Those who know, but essentially we want to be taking this trade in a clean candle zone. So what I mean by a clean candle zone is that you can't be taking it in choppy zones like this. Not going to work. You don't want to be trading in chop, because obviously what can we see happens when it's choppy? Price continues to be choppy. When it's clean, price moves clean. You see how that works? Clean move down, clean move up, clean move down, then clean move up again. Here's another clean move. If maybe we get above here, we're going to get a clean move up. Same thing here. This is going to be an ideal trading zone, is inside of here. So once you identify your trading zones being clean candles, right, which means no support and resistance, now you have bias, now you have your clean candles. Now we get on to what? The juicy stuff, the actual entry model here. So what is going to be the trigger of events that are going to allow us to form this entry model? So first thing is we have our trading zone identified, right? So we're going to take this real life example here. And a lot of people will show you these entries that sound really good, but then they never use them, right? It just sounds fancy. They never use them themselves. I'm showing you entries that I actually use here. So if we go here and replay to this point here, I've identified, right, that I have a potential clean candle zone here. We have a resistance form, right? So this entry model will need a resistance form before your entry, or if you're looking for sells, it needs a support before your entry. So what you'll need to happen is, let's say we'll take two scenarios here to begin with, right? Scenario number one is that you're going to have a clean bearish zone, and scenario number two, a clean bullish zone. So we write this BE for bearish and BU for bullish. So obviously on a bullish zone, which is clean, that's our zone where we can be looking for sells, right? Reason we're looking for sells is because we're going to look for price to fill that clean zone that went up. If this is a bearish zone, then obviously we're looking for buys, right? So I'm just going to draw an arrow where these candles are coming down, but we're looking for buys. These candles are going up, but we're looking for sells. So before you take sells in this zone, what you need to happen is you need some sort of support to be broken. And here you need some sort of support to be resistance to be formed. So once you have that resistance support here for sells, or that resistance here for buys, you're going to wait for a 15-minute candle to close above that zone. Okay, same thing here, 15-minute candle to close below that zone. Has to close below. But that's not only the thing we need, because our entry is actually going to demand us dropping onto a 5-minute time frame. So this 15-minute close here is the confirmation that we're going to have, because now we have a 15-minute candle closing either below our support for sells or above our resistance for buys, okay, in our what? Trading zone. And understanding bias, which we talked about in the beginning of the video, will allow you to identify if you should be looking for buys or if you should be looking for sells, right? So that's where that becomes useful. So once we identify we have that 15-minute candle close, we need to drop to the 5-minute, and on the 5-minute, what we need to see is that what I'm going to show you. So we have the 15-minute candle close. We need to see structure formed in a 15-minute time frame. So if we understand candles backwards, one 15-minute candle close is going to be on the 5-minute, 3 5-minute candles closing bullish, right? That is how this candle looks on the 5-minute, because it's just a bullish close. You have 3, 5, 10, 15 makes a 15-minute candle here, right? So that's how that is formed, okay? Now, what we need is there's no structure on the 5-minute within this candle that closed. So in order to formulate this entry model, we need to prove that price is creating structure to leave this zone and continue to the next zone. Not only can we place stops below that structure if the candle is too big, we can also rely on that increasing probabilities of this trade. So what we wait for is we wait for the 5-minute to pull back here. It can be 1 even or 2 bearish candles, can be even 3 bearish candles, and you need the next candle to close above the 5-minute, okay? You can even go break of the 5-minute if it's a high volume time, if you're trading during like London Open, New York Open, New York Stock Exchange Open, any of those times you can just break that 5-minute structure. But waiting for the 5-minute close above is also valuable, especially if there's like 1 minute before the 5-minute candle closes. Just wait for the close above that structure. Stop will go below the previous 15, but if that previous 15 is massive, like 30, 40, 50 pips, and the average pips, you know, your pair moves is like 10, 15 pips, you can even put stop below that 5-minute structure. So let me go show you a real life example that is something we actually did take. And this is why I want to talk about this, because you know, this is not something that we just don't do. So first of all, here's your 30-minute close above, also going to be a 15-minute close above. And the 15-minute close above can look like this as well. We just need a close above. Here's your clean trading zone here, okay? So remember, clean trading zone, we had a resistance form, and now we closed above the resistance, okay? When you drop down to the 5-minute time frame, okay? Now we have the close, we need the structure to form. So we wait for that structure to form. There's your structure, right? Two 5-minute candle pullback here. What do we need next? We need the close above. So this is now ending up 3 5-minute, no problem, 3. This is basically almost a retest, and it doesn't have to retest the previous zone here, right? So here in the exclusive group, this is the trade we were looking for, NY. So I popped it in NY here. 5-minute can be quick, get the close above like the plan with the 5-minute structure, right? And then, yeah, you know, this was the one, right? You can see that's the exact same one, which you'll see populate now on the charts. And this was exactly the plan that was sent in before it actually, you know, before it populated here, right? We could see here, I mean, if I can make this bigger. So this is stuff that we actually use, and I want to show you. Support above here for buys can be fake out, so waiting for 5-minute support, right? So we can see how that populated to take the trade eventually. So let's go and dissect that trade basically. Obviously, then we did end up taking it here, and then just closed the trade at a almost a 1-to-1 here. Because it was pre-NFP, so didn't want to be greedy. But 5-minute structure, 15-minute close above the resistance here, and then your entry is going to be break of high. Break of high, you can put stop loss below this 5-minute structure here, and you aim for somewhat like a 1-to-1 here. That's all you're going to get on this type of move here. You know, you're not going to get, since this was pre-NFP, right? Pre-NFP, normally you just have to take what you can get. If you can get, you know, 12, 15 pips here is going to be good because this was pre-NFP, right? But normally you will retrace the whole move here, right? You will get the whole move. Look, this is the NFP candle here. There you go, that's NFP. And then you can see what happens after NFP. So remove this candle, pretend that NFP never was there, and you would take this setup normally. You will see that what end up happening fills the whole range, right? We fill the whole range and you'll get the move from the bottom to the top. But obviously had to close before NFP because news trading inconsistency, and that would have stopped you out if you didn't know that there was news. So that's important, you know that there's news. But that will fill that whole range, and that's going to give you the confidence to trade that type of move. So this is a very, very good price action based entry model here that is extremely, extremely powerful to use. Now, sometimes you don't wait for that 5-minute structure, you just have to go, but that is situational basis. Of course, I can't explain all of that in one video because sometimes you'll just miss the move waiting for that. But the time you get this setup and you see it, it's a very, very good, powerful setup. And you know, there's different plays for different scenarios. You know, you might, if you're just searching for this setup, then it might, you know, you might only get 1 or 2 a week. But when you combine all the price action setups today, not today, but together, you're going to be set up, you know, well to be able to execute on most moves that we see happen on the chart. So that's what I wanted to say here. I hope that this video has been useful. If you have liked this video, be sure to leave a comment and let me know. Do the YouTube business, leave a like and subscribe. You know the drill. I really would appreciate it. Join us on the live streams. And with that being said, take care, trade sharp, and hopefully catch you guys very, very soon. Peace.